Welcome back to the podcast, Can Silicon Valley Save Healthcare? The podcast where healthcare leaders talk about technology leaders talk about healthcare, investors talk about impact, patients have a voice, and everyone has an opinion. Once again, I am your host, Adam Silverman, and you are looking at Can Silicon Valley Save Healthcare? And on this episode, I am thrilled to welcome Peter Altschuler, who is a director at BRG, as well as a representative or a director of his own family office. Peter, welcome to the podcast.
Thanks, Adam. Thanks for having me.
Absolutely. It's been, a year? Did we see each other? No, we saw each other at Vive.
Yeah,
so
maybe
it's been
6 months ago. Yeah.
So it's been a busy 6 months for you?
Sure has.
Yeah.
So for my background, I've been doing healthcare consulting for the last 12 years with Berkeley Research Group. We focus on performance improvement for hospitals and health systems. So we're able to work with different health systems across the country, understand their challenges, and work with their executive teams to implement performance improvement processes with hopefully some financial benefit too. And then you're right, over the last couple of years, I've been doing some investing on behalf of my family, and I've been looking at different startup companies all the way to some growth equity companies to invest in and help kind of grow and scale and bring to market.
So you like doing two different things, or you're just not ready to make the leap to move from one to the other?
It's very challenging, but I do think the consulting angle really helps drive my perspective on what clients and customers really need and what they struggle with. And then also helps me to my portfolio companies, help build out the management team, help them understand kind of go-to-market strategies, and also help utilize my network as well.
So you have deep expertise and experience in process improvement in healthcare. You walk around a floor like you see at this exhibit hall, and you see all of these companies with solutions, which suggests that they're having problems that they're trying to solve. So I'll just ask you off the bat, do you think healthcare is broken? Are the problems that are being represented here a fundamental problem within healthcare itself? And then the secondary question is going to be, can these companies solve those particular problems?
Yeah, so I definitely think healthcare is broken. I think it's going to be hard to find anyone here or even in the country that says, healthcare is working great. I think healthcare costs are 26 or 27% of GDP. So there's a lot of room for improvement.
Right.
I was actually attending a panel yesterday, and they said the two areas that people didn't touch before were education and healthcare. Yeah. And the funny thing is, those are two probably areas that are most broken.
Right.
So I definitely think there's room for private businesses and companies to come in and help improve. I think when you look around at the health conference, you see a lot of small companies and larger companies like Syllable that are making big impacts. But I think the only way to solve some of these problems is to have focused approaches to solving smaller problems instead of trying to tackle everything. And with some of these startups and bigger companies, they are laser focused on their mission of trying to accomplish a certain piece of what's broken in the puzzle.
Right.
And putting that all together, I think will really help hospitals, health systems, and ultimately patients.
So I had a guest on earlier, and we were talking about this notion of how do you align the energy, that is being exuded by all of these companies, because they're all working on, most of them are on important problems. That if they we'll solve a problem and we'll make something better. But how do we align on whether you call it a roadmap or a set of indicators that, in 10 years when we turn around, we say, what happened back there at health? Was that the catalyst of something that was happening? Was that a decade of significant change, or was it just a decade of incrementalism? How do we, short of regulation, or does it require government intervention in order to get us there?
Yeah, I think that's a great question. I think that's very hard. And I think that's the one thing, or one of the things that is broken with healthcare in general is trying to align stakeholders, right? You have patients, you have financial incentives, profits, and providers and health systems, and payers. And trying to get everyone on the same page to march towards the same goal is very, very difficult. To your question about looking back in 10 years, are we going to say this is successful or not? I'd say no question, it has to be successful, period. And just looking at it in the sense that even if companies here are not going to be around in 10 years, and we all know this kind of startup lifespan, and it's not very glamorous, but still that the work that they've done and the problems that they've identified will either be kind of absorbed by other companies, improved by health systems on their own, improved for the patient. But there's definitely a lot of progress that's being done right now and in the future. I think if we looked 10 years ago, there's really zero disruption in healthcare and technology in healthcare. I think ZocDoc might have been one of the first kind of companies that really broke the
Right.
mold. And when they first came on, people were like, this is crazy. Like, you're never going to get providers to agree to let patients just self-schedule and stuff. And now that's what patients expect. If the airlines can do it and you can book a ticket on your phone,
Right.
why can't you book an appointment to see a primary care physician or even your orthopedic surgeon? And yeah, there's going to be some inefficiencies there. Does that patient need to see an orthopedic surgeon where it could be handled by primary care? But I think overall, we're moving in the right direction.
Is the venture funded model the right model to move the needle?
I think it depends what company it is, right? And if a company can build and scale on their own, one, that's pretty impressive. And maybe they don't need that venture funding. But I do think, in general, venture capital is very good for just disruption, and especially in healthcare too, because a lot of these companies need to get critical mass to build and scale. And also, and I focus a lot on the provider side, and so that's kind of where my
Right.
perspective is. But if you're selling to one health system or hospital, they're going to have unique challenges. They're going to have probably one EMR and stuff like that too. And so when you try and expand that, it's hard to do one by one. It would take a company maybe 10 years to get 10 different systems on board, and they're not going to be able to survive that kind of burn rate.
Right.
And so that's where you need that venture capital backing financially. And then also, I think venture capital is now pouring money into healthcare. And so they have a very good understanding of who can help whom. And if they can make connections with some of their other portfolio companies and really just help, again, get everyone on the same page and move to the same direction.
In my experience, there have been certain health systems that are embracing of technology, that are willing to invest in technology. In your experience working with health systems, what are the big challenges for people on the outside? So for these companies to work within healthcare to help improve some of the processes that you work with your clients on, what are the big challenges?
Yeah, so I'd say one of the big challenges, especially in healthcare, it's very relation-based selling. And so you need to have that relationship. And that's hard for people to kind of network into and get, because also there's going to be different stakeholders. So you're going to need to appease some financial person, the CFO, and some technology person, the CTO, CIO. But also you need to get the providers on board too, because the providers really drive a lot that goes on in the health system. And so if they're against some certain technology, no executive is going to kind of put their job on the line saying, let's be risky, let's try this, let's go for it, and hopefully improve the patient's life, when the providers are all going to be pushing back against it. And so I think a lot of the challenges for companies here are to, one, get those relationships, and then two, prove that they can directly integrate with the EMR. Almost all my clients ask for any health tech solution that I try and bring them is, does this platform integrate with my EMR bidirectionally, or am I going to have to layer on top and have another kind of system that I need to go through and input data or export data? So I think that's another big challenge. And then, as you're talking about, there's so many different EMRs, so many different versions of EMRs. It's very difficult to replicate that over and over and scale that.
Right. So do you feel like the EMR obstacle, is it a real obstacle, or is it more of a head fake? It's a nice excuse. Well, I don't want to learn about the new technology company. I don't want another vendor. I'll just throw the EHR as the real obstacle problem.
So I agree with that premise. I think maybe 5 years ago.
Okay.
I think now a lot of health tech companies are getting very good using FHIR and all these technical terms that I don't really understand myself, how to bidirectionally integrate with EMRs. And so I think that is becoming less of an objection. They're all kind of certified with these different certifications and really gain credibility with the technical people at the provider level.
One of the things that I've seen as a bit of an obstacle is when you look at the way health systems buy things and the decision process that's involved in buying a technology. Most health systems today had those individuals and those processes developed around hardware. I'm going to buy an on-prem Epic installation. I'm going to buy an on-prem Cisco telephony stack. A lot of the companies that we see around here on the floor today are SaaS companies. And SaaS is completely different. The contracting is completely different. And even the difference between a SaaS order form and a master purchases agreement, where a master purchases agreement is dealing with hardware and a software company's coming and saying, I don't have any hardware. How can I sign this agreement? What kinds of experiences have you seen within the customers that you have?
Agreed. But the only thing I would say to the health systems is you got to get on board. if every other industry is moving toward the SaaS model, there's a reason why it works. Salesforce is here, AWS is here, there are a lot of big SaaS companies. So they just need to understand that that's how technology is working now, and they just need to get on board.
How are you seeing the macroeconomics playing out with your clients at this point in time?
So I think that's a great question and great point, because as we see kind of the economic environment and about 30% decrease in the stock market, well, a lot of health systems have their funds or foundations invested in these assets.
Right.
And so they are feeling the pain too. So they're focused now on operational and financial performance improvement that they can control, because they can't control the stock market. But that also puts pressure on them financially to make new investments. And so some of the vendor or health tech partners, I think another panelist said, we don't refer them as vendors anymore, but some of these health tech partners that we're working with some of our clients, we're trying to work with them to, okay, can you push back your fees? Can you delay your fees until the health systems get some of this benefit up front that you've been talking about? I think one of the other panels that I attended last time at Vive, the LifeBridge CTO, Tressa Springman, was involved about ROI-based selling and how return on investment is very important to health systems because of this kind of financial position that they're always in. I think a lot of people misunderstand about health systems, most health systems. They think, oh, especially during COVID, they're making so much money in that. That's not true. Most health systems operate on like a 2 to 5% margin.
Right.
And so that's very, very thin. And especially a lot of the clients that we work with are even lower than that. And they're calling us in for financial turnarounds, operational turnarounds. And so when we try and bring in these partners, the economics is very difficult for them to deal with because they just don't have the cash sitting on their balance sheet. So it is a challenging environment. I think with the inflation and economic environment too, that's putting strain on patients.
Right.
And that ultimately is going to impact the health system as well.
It's interesting you started talking about health systems as investors. There are a number of large health systems that have created their own funds. They've bought wholesale into developing innovation hubs and things like that. What's your opinion of health systems as a venture investor?
That's a great question. I've actually talked with a few health systems here that have their own venture arms. I think overall it's good, but the problem is they don't have the same type of mindset as a traditional VC investor would. And so they're not really looking at necessarily return on investment and IRR and different metrics like that. I think they're trying to understand what are their health systems struggling with, what are their patients struggling with at their location and their geography, and how can they find companies that help impact that. I think a lot of health systems as investors look for solutions to problems instead of just what's out there in the market that might grow and scale that would be profitable for the system. A few of my clients have had their own venture funds, and actually they've turned out very well for the health systems, and they made some of their biggest financial returns and gains on some of their investments that they've made. I think the health systems do have a unique position being an investor because the technologies and companies that they invest in, they have a huge customer base themselves to implement that technology, and they can see, okay, does this really work? Because I do think a lot of health tech companies, even ones here, struggle with that implementation.
Right.
And struggle with, okay, let's get this software and technology up and running and make sure that our customers or clients have full utilization of that technology. And I think that's one area was as a consulting firm where we can partner with health tech companies and say, we have expertise implementing, rolling up our sleeves, working with our clients and executing on different initiatives or ideas.
So you run into a lot of people at a conference like this, and inevitably somebody's going to be a young entrepreneur who looks at your name tag and it says that you're an investor and you also spend a lot of time as a consultant, and they want to know what they need to do in order to be successful. What kind of advice would you have for a young or a new entrepreneur?
Yeah, first off, I think it's very admirable.
Do you believe that?
Oh, absolutely.
Really?
Oh, absolutely. If you just look around at this conference, they've all been built by aspiring entrepreneurs.
Mm-hmm.
And most of these companies are grown from one idea. And I think it's incredible. Look at Syllable, look at all these other companies that probably started out with 1 or 2 or 3 founding people with an idea, went to a health system or a potential customer and said, can I pitch this idea to you? Can I pilot it? It worked. It kept growing and building and scaling over time. I think that's how we have health today. And I think it shows just the disruption in healthcare over the last 10 years where I don't think health existed 10 years ago, right? So I think I do absolutely believe that. I think the other advice that I would give is just be very focused and very determined. I think it's very easy right now to well, at least a year ago, to go to any kind of investor and say, I had this great idea. There was a lot of free money out there, as people would classify it, before interest rates went
Right.
up a lot. And they'd have the capital to kind of go and pitch to a customer saying, I had this idea, let's see if it works. Now in this economic environment, I don't think that's true anymore. I think you need to be very focused on your idea and executing. And even if you can, going out and piloting on your own before you go to an investor and saying, I have this idea. Also, I would just say a lot of people, I don't think, focus on profitability, but you need to at least understand how to get there. And that's kind of been a lot of discussions on panel talks over the last couple of days here at health conferences. You just can't go for growth, and you just can't grow the top line. You need to really focus on your profitability, because ultimately you either need to be acquired by a strategic investor,
Right.
or a strategic or another investor, or the public markets. But again, even now, over the next couple of years, that might not be
Right.
a viable option. And
So
if you're
fundamentals are coming back
I
to.
think absolutely. And I think that's not only in the private markets, but the public markets too. And we see a lot of companies that IPO'd that just haven't gotten that,
Right.
operating margin down, and they're taking a big hit in the public markets.
If we don't get much stability in the next 6 to 12 months in terms of the financial markets, what's going to happen with the public markets in terms of companies who were considering going IPO, where it may not really be the time right now for that?
Yeah, I think if I knew it was going to happen in 12 months, I probably wouldn't be sitting here. But to your point, and a lot of the panelists said, I think a partner at Google Ventures even said, he thinks 2024 is going to be worse than 2023. And so I don't think the public markets are going to be an option. So if that's the case, then I think it's even more important to focus on the profitability and being able to be in control of your own destiny instead of having to have someone else acquire you or inject capital for a dilution. Again, focusing on your core mission, focusing on what you do well and your competitive advantage compared to all the other people.
With your investing hat on, what keeps you up at night?
So I think what keeps me up at night with my investing hat on is just, are my team supported for my portfolio companies? And do they have the resources that they need to build and scale and grow? And I don't ever want to be a hindrance on that, but just trying to understand their challenges and how I can personally help and provide value to them. Because, I think especially last year and 2 years ago, again, capital was readily available. So they didn't necessarily just need money.
Right.
They want a partnership and some strategic, advice and networking and stuff like that too.
Do you think that with the economics as unsettled as they are right now, that the characteristic of the entrepreneur will change? And what I mean by that is, we've had 10 years of low interest rates, 10 years, to your point, of lots of funding coming in. To some extent, maybe there were people who just like, the most important thing for me is to get on a rocket ship and make $1 billion and be done with it. That's, to me, the companies that are going to succeed in the next 5 years, maybe, it's all going to be about grit and resilience. So is it just that the entrepreneur themselves has to flip, or is it going to be a different person that's attracted to that environment?
Well, I definitely agree with what you're saying. And I think that they're going to be the same kind of pool of entrepreneurs. The problem is that big pool is not going to make it out of the gate. And the market's going to dictate that, because that same pool is not going to get the same funding that it traditionally did over the last couple of years. And so only those entrepreneurs that have that grit and resilience, but also a solid plan to go forward to execute on,
Right.
are the ones that are going to get that capital to grow and scale.
What are the challenges that your consulting clients are dealing with right now?
A lot of it is around, so I think two big things. One is patient engagement and patient access, making sure patients attend their appointments, making sure that they have the right resources with physicians and providers to attend to those patients. The other is reducing length of stay in the inpatient system.
We're still talking about length of stay?
We're still talking about it, and people are still struggling with it. At BRG, that's one of the biggest areas of growth for us right now. Our team is hiring like crazy to just respond to clients' needs.
Interesting.
Yeah.
Is it because it creeped up, or they just are trying to squeak
Both.
out?
I think it's not only creeped up, but also there's a lot of COVID lag. And health systems are still dealing with COVID, especially some of those patients that, have struggled with COVID themselves.
Right.
And it's a big issue.
That's interesting. We were talking about length of stay in the 80s.
Yeah. And I think it just goes to show the system in general and how overloaded it is.
Yeah.
And the burden that a lot of these health systems take on, and also the consolidation too over the last 10 years of health systems. And a lot of rural systems that we've worked with in the past have either been acquired and when they're acquired, those services are reduced greatly.
Right.
Or even just have to close down. And that is, I think, now flowing through to the entire system. And now with COVID kind of over the last 2 years, it's really exacerbated all these problems.
So last question for you. Given the struggles that these health systems are having, how primed are they to have a discussion about, they have these immediate things that, it's basically putting out fires. How do we engage them in productive conversations about new technology, new strategies?
I think the first thing is listening and understanding what they are struggling with and what their challenges are, and then being able to respond to that and saying, we have these solutions that help you. So I think almost all systems are struggling with the human capital and a lot of agency and overtime that are really weighing on the profitability and the financials. So bringing technology to say, if we implement this, that'll allow your workforce right now to focus on higher skilled tasks. So a lot of automation, a lot of RPA, but to go to them and say, what are you struggling with? Instead of saying, we have this solution, you may or may not have this problem, let me sell it to you, listening.
Are they embracing the concept of automation as a tool to help with workforce challenges?
Absolutely, but I think they're also skeptical too. Because I think a lot of people have said, we can automate this for you, we can automate that for you. And they may have automated that one small piece, but it added on 3 additional human tasks that need to be done because of this automation.
Got it.
So I think it's just kind of actions speak louder than words, and saying, we've had success with these other 5 health systems. Feel free to reach out to them. This is what we can execute on. This is how we can help you.
Awesome. Well, I think we'll end it right there. Peter Altschuler, Director of Berkeley Research Group. Thanks so
Adam.
much.
Yeah, appreciate it.
All right. Good.
Yeah, that was great.
Yeah.
That was fun.
Good.
Yeah.